Hello, good morning. Thank you for joining our daily outlook for majors on today, 11th of November 2011. Today I will be doing the webinar instead of Slobodan. My name is Omar Al-Fouda. We see no major developments from the news that we've been hearing the last week, and we see that the markets stopped falling and now we're in somewhat of a corrective mood. We have some news in our economic calendar for today that could cause some moves. We have in around an hour and a half news from Britain, and it's the producer price index, which is an index that counts inflation, and of course inflation levels in England is something closely watched because they are at high levels compared to other countries. And any inflation news has its effects on interest rates levels and decisions, which has their effect on the currency markets. We also see that at 4:30 we have some news from America, and it's consumer sentiment. So we might see some moves on the currencies against the dollar at 4:30. Though these days news from economic indicators are not affecting the market as much as news from that come out of Europe and what they're doing to solve the problem. Of course, if we review what happened in the previous week and what caused the market to fall further, we see that the focus shifted from Greece, and now the focus is on Italy. And people are waiting to see the progress in Italy that they will take regarding fiscal reforms, austerity under the new leadership. And the big news that caused the market to fall, of course, was the yield on 10-year Italian bonds went above 7%, and that's a very high price for governments to pay. And it's at an unsustainable level. So, and that also means that the people and the investors are worried about Italy. So that's what mainly caused the fall of the euro we saw during this week. And of course, the same story that we have been following in the past weeks regarding Greece. People are waiting for them to choose a new prime minister, implement new austerity measures, and finally they're waiting to see if they're gonna get the bailout money they need to avoid default, which will happen if they don't get the money at the end of this year. If we want to see the market mood, we can look at the Dow Jones index, and usually if it's at above 12,000, it means that there's some optimism. But if you look at it now, the current trading prices of this index, we see that it's below 12,000, so there is some fears according to this index. Usually most currencies and global equities follow this index, and they take it as a leading indicator of whether the market's going to be bullish or bearish. And we do see that there is some correlation between the movements of the euro and this index. So usually people look at this index to know what's going to happen with the other currencies. So if we go to the charts to see what we're talking about, the first currency we follow is the euro against the dollar. And if we start with the 4-hour chart to get a bit of an overview, we can see, of course, the first fall of the euro. We can use a trend line to draw the falls and to see at which levels they happened. So the first major fall of the euro, when it stopped rising and it hit the high of 42.50 on the 27th of October, we saw a decline first to 36.00, and this was the previous low that people were monitoring. for it to break to go further. But what we saw over time is a bit of a correction and a rise, which ended at the beginning of this week with the new news from Greece that made it go back to a falling state, and we saw the break of the previous price 36.00. So 36.00 is a psychological price, and we see the market now hovering around it, above and below it, and yet to decide whether it's gonna stay above it and consider it as a support, or if we're gonna see it start to go down below these levels and target the low we saw yesterday at 34.80. At 34.80, it has to break this level to see it to continue to go down. But all this stuff depends on mostly fundamental news than technical movements. But now if we go to the 1 hour chart, we see the market went back up, and we can draw a trend line below this rise. An indicator for us that the market is not going to sustain this corrective mood and continue to go up is if we see the prices trade below this trend line, would be one indicator for us that the market is going to go back onto the previous low we saw yesterday. The high we saw, the highest price in the past 2 days was at 36.50, so this would be our resistance for today. We saw the market go near that level again and fail to break that level. So we need to see it break 36.50 for our rise to continue. Of course, if we go to the daily chart to see it, to see how prices are moving based on a daily action, we can see that last week is when this fall started from 42. It was Monday. We had a fall of 350 points, and another sharp fall on Tuesday, a fall of almost 250 points. After that, the market started to go up again from 36, and then again we saw 2 days ago a sharp fall of 350 points. Usually the euro, we see movements, the difference between the high and the low, at around 150-200 points. So 350 points is considered big moves, but this was driven by fundamental news. So the outlook is going to be, for now, a bit bullish unless we see a break of the previous low we mentioned at 34.80. Now if we go to the second currency we follow, and it's the sterling. We usually say that there's some correlation between the sterling and the euro because, of course, the two economies are tied together. And if we look at the daily chart to start with, we see there was the same fall on the 10th of November, and there was a fall of around, not as much as the euro if you notice, but still a big fall, 250 points on this currency. This currency for a long time during October, just like the euro, was going up, and we saw the end of the rise at 61.60. We saw the market go up to this level again and try to break this level 3 days ago on the 8th of November, and again on the 9th of November we see it near these levels. When it failed to break these highs, a range of 61.50 to 61.30, we saw the drop, and largely it's because of the news that's been happening and its correlation to the euro. So it's hard for this currency to continue to go up when the euro is dropping. So if we go back to 4-hour chart, and if we're looking for support and resistance, we can see the low of yesterday at 58.60 is the same low we saw on the 3rd of November. The market failed to break this level on the 3rd of November, and it failed to break it again yesterday, so we can draw a line under here and consider it our support. It has to break this level for us to see the currency to go down. So like I said, at 11:30 we have some inflation news from England, so we might see some movements, or the market might take a chance on this news to move the currency. but it's widely expected that we will not see it breaking any key levels, either support or resistance. We notice now that the prices are near the support level, so it's probably going to stay in the area to try to test if the market feels comfortable breaking this level and to continue to go down. But for now, it looks like it's a bearish trend. But with strong support that might not cause it to go further down. The euro and the sterling, of course, are considered currencies of high return, and they are considered more risky than more safe haven currencies, such as the two that we're going to talk about now, the Swiss and the yen, which usually people buy and transfer their money to when there's a bit of fears in the market. So they usually have different effect and movements than the euro and the sterling, usually the opposite effects. So if we go to the dollar Swiss now, we need to go to the 4-hour chart to understand exactly what is the story of this currency. Ever since the currency stopped rising, and the end of the rise was at nearly 93.00 for 1 month during the month of October, when the euro and the sterling were rising. This currency was appreciating against the dollar, and we saw the dollar weakening against the Swiss, and it ended at 85.65, and ever since then we've been in an upside trend, as we clearly see from the chart. So we can draw a clear channel here that shows us the trading range and the direction currently the prices are moving in. So as long as the currency continues to stay within this ascending channel, the outlook is going to be for it to continue rising. If we see it break the lower trend line of this channel, this would be an indication for us that the rise ended, and then we need to see it be under pivot points to further confirm the fall. For now, we see the highest price in this rise is 91.50, and of course this is going to be our resistance if it continues to go up. If you notice, this 91.50 is the same as the lowest price in this candle here on the 7th of October and the 4th of October. So the previous support, when it got broken, now turns into a resistance, and we see the market exactly went up to this point and now retreated from this point. So there is some difficulty on the way up beyond 91.50 before we target the other highs and the other resistances. But as long as it stays within the channel, we're going to say that most likely the outlook is going to be bullish. So the euro and the sterling are in a falling state, and the dollar Swiss is in the opposite direction and it's going up. To go to the final currency, which is the dollar against the yen, as we can see, since the intervention ended on the beginning of this month, there's not a lot of movement on this currency. There's a bit of a fall, but it's not considered a lot, as the fall is only around 40 pips drop. Now it's nearly, we can see through the Fibonacci indicator. We just change the colors here to make it look more clear. You see the intervention. The intervention came at a time when we saw the price at a historical low of 75.50. This historical low caused the central bank of Japan to enter the market and push the currency up, as you can see, 390 points. ever since the 390 points rise on the 31st of October, we can see through the Fibonacci indicator that the market retraced and erased 50% of that gain, so around 200 point drops since the beginning. Most of that happened during the same day. After the rise of 400 points, we saw a 160 point drop, which is at 40% level Fibonacci, and it stayed like that for a long while, not moving within a 20 pip range every day in the high and the low, and then we saw the continue of decline. Now it's at 50%. So the question will be whether it will break this 50% level and continue to drop. We have the pivot point for this currency is around 79.00. As long as it trades below this level, we say most likely it's going to fall. We need to see it go above the 79.00 to say that the outlook is going to go from a drop to a rise. So that's it for today's price movements. You can write your questions now on the bottom of the program. If there's no questions, we're going to end the daily outlook for today. We thank you for listening. Please join us again next week. We wish you successful trading, and goodbye.